You know, when Benzinga makes an article talking about AMC stock, a lot of people are talking about AMC stock, and that would make sense today, considering AMC is now above $12 per share. Yet again, at $12.55, AMC stock is up about 15% on the day at the time of recording this video. And I do expect there to be a lot more volatility to come, obviously. But I've been calling for a big bounce from these lows. And it looks like maybe this bounce has just started. So let's get into what the data looks like, what might or might not happen with AMC stock, just everything you need to know as a general statement. Now, if you are listening to my voice, which hopefully is every single one of you guys that clicked on this video, hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comments section. So first things first, what happened with AMC stock recently? Well, the stock dropped about 80% for no reason, essentially. I mean, obviously AMC has the ability to massively dilute shareholders. If the free float outstanding is, call it 50 million, AMC can issue up to 550 million. I mean, you could see 1,000% dilution. So there's obviously a reason why AMC stock dropped 80%. The problem is it dropped 80% and we haven't seen that dilution yet. AMC can dilute us, but AMC stock dropping 80% has factored in a lot of dilution already, and I think some investors are starting to say, hey, AMC stock can dilute shareholders by 1,000%. Are they going to dilute shareholders by 1,000% anytime soon? Probably not. But even in the event we do see a lot of dilution, how much of that is already priced into AMC stock? And the answer is a lot of it. If the stock dropped 80%, odds are, 100% or so of dilution is already priced in AMC stock. Is AMC going to dilute us 100%? Probably not. Why? Because they don't have to. Okay. There's nothing that says AMC has to dilute shareholders right now. Now, again, if we get news that AMC did dilute shareholders, hopefully, one, it was at higher prices than where we are today. Hopefully, it was in the high teens. But even when we get that news, it's probably going to be bullish. So there's not a lot of kind of bearish things left for the bearish thesis in AMC stock. It's already, I don't want to say as bad as it's going to get, but it's already really bad. The stock is dropped over and over again every single day. Now, when you look at some of the technical indicators as well, like the RSI is at 26. Anything under 30 is oversold. You were at one point, you just hit a low of 22.75. That is like abnormally oversold for really any company, but AMC, you just haven't really seen that before in this whole saga. You did that back here in January of 2021 a little bit when AMC really came off of the higher levels that we were at, $60, $70 down to, split adjusted prices, I guess. Jeez, excuse me. It would be like $75 or so. You were really oversold. These kids just, they exhaust you. But you really haven't been to this point any other time, even within the last 2 years or so. We've seen big sell-offs, but this one has been wildly dramatic. And I just seen Mitch McConnell froze at the stand. That's what I was kind of looking up at the TV at. So God bless him. Hopefully everything is okay there. But let's go ahead and continue on with everything that is happening with AMC stock today, as well as the broader markets that you need to know. If you hear the dog barking in the background, I don't know what his problem is. He just will not stop barking today. So let's run through some of the data, okay? As you guys know, this data is really not accurate, a lot of it. Some of it looks a little more accurate, but just by and large, you really can't listen to this data. You have short score of 81. You have $206 million worth of short positions on AMC currently. The short interest is really messed up. That's sitting at 13.35%. Free float out on loan at 20.15%. These numbers are not true by any means. If you look at shares out on loan, that looks more accurate to me, and that's 28.5 million. This would be short interest, almost 20 about 50%. So short interest, in between 35 and 45% as per my estimate, wouldn't be too far off of realistic. Now, days to cover sitting at 5.24, cost to borrow fees 17.52%, and utilization at 84.33%. So You really got to take this with a grain of salt. I think the data that we're going to get from the exchange reported short interest number is going to be huge. Back on August 15th, as I've said many times, the short interest of free float was 29.24%. AMC stock has dropped well over 60% since that reading. So I find it hard to believe shorts covered on that 60% drop in any material numbers. And I find it hard to believe the short interest is not 35 to 45% right now, if not potentially even higher than that. There's been some reports from, different outlets that AMC short interest could be 95%. We could have over 100% short interest. That is always a possibility and would make sense why AMC stock is bouncing so aggressively today. Even a small amount of shorts covering on short positions can be very aggressive as far as price action movement when you do have a float that is that sold short. Now, we don't have any option analysis today as well. Over here on Ortex, the data is just not updating. It's just nothing's happening with it. But when we take a look at the option chain, we see that the $12 strike went into the money. This was one of the bigger ones that controls over 1 million shares that would need to be bought or hedged for by the market makers. And at the $12 call, you have 7,300 for open interest, and at the $12 put, you have 4,400 for open interest. So some very big numbers here as far as where we currently are. I mean, don't expect to see $50,000, $100,000 strikes right now, just because that would be so much of the overall float that would just trade at that strike alone, due to the reverse split and now only having about 55 million shares outstanding. These smaller numbers are actually a much larger deal than you would think. So the $12 strike, the just $12 in general, is very important, and you are well above that today, now at $12.45, up 14% on the day. So it's very volatile. At one point today, we were up over 23%. So just expect a lot of volatility into the end of the day today. The next major strike for AMC is going to be $13 per share. That is where you have 12,268 calls that are held at the $13 strike, which is currently out the money. At the $13 put, you have about 7,500 options that are held in open interest. So some pretty big numbers here. That would be about 2 million shares that market makers would need to buy in order to kind of oblige for those strikes. So some pretty big numbers that we are seeing, and if we continue higher, well, you're going to start to get into even larger option expirations, like the $15 strike, as well as the $18 strike is, I believe, the largest one on this whole entire option chain. The $18 calls have 16,000 for open interest. That controls 1.6 million shares. And at the $18 put, that controls 14,000 for open interest. That's about 1.4 million shares worth of potential buying pressure that market makers would have to put on AMC stock. That is, simply put, a lot. Okay, relative to the volume that we are seeing and where the actual flow is. Now, even right now, AMC stock is 84% below Wall Street's average price target on AMC. Now, AMC has not been favorite stock on Wall Street. I think that's safe to say. So if you're 84% under Wall Street's price target of $20 per share, that represents a huge opportunity. Either that or AMC is going bankrupt, and we know AMC is not going bankrupt. So there is a huge opportunity right now for those of you guys that are gutsy enough to actually take it. Now, let's look at the Stonko tracker data. You now have 13,000 calls in the money, as we kind of just went over. You did see quite a few calls go into the money at the $12 strike. The $13 strike, you're going to see a lot more as well. So out the money calls for this Friday, for September 1st, 45,000 calls still out the money. In the money puts at 24,000, out the money puts at 51,000. So these numbers are big, guys, relative to, what we even seen before. These are some very big numbers, and that's all because of the reverse split. They're big now because there's not as many shares outstanding. So this is really compared to, what? 10 times, right? 10 times this amount. This is really equivalent to like 490,000 calls out the money. based on kind of what we would have seen weeks ago. So huge option activity that we are seeing for this week. If we take a look at the FTD numbers, it looks like we did just get an update. So as we went over, today is August 30th. You have 7.5 million FTDs that come due. Tomorrow, you're going to have 6.8 million FTDs that come due. And on Friday, 7.1 million FTDs that come due. And then the next week, you're going to have FTDs that come due every single day of next week. You start off at 7.7 million. You drop to 7 million, then to 4.3 million, then to 4.8 million. And then eventually you drop to a low of about 3 million on September 14th. And then you ramp up again from 3 million to about 4.5 million by September 18th. So the FTDs are not going anywhere. And that's why AMC stock continues to be on the threshold securities list, because there is a lot of FTDs that are coming due every single day. And the float, I believe it's 0.5% of the float in FTDs every single day for 15 days to be on the threshold securities list. And then you have to, do that to the opposite to get off of the threshold securities list. So you're just staying on this for a very, very long time, guys. So there is all of that. That is kind of what you need to know as far as AMC stocks specifically. As far as the economic data that we've seen earlier, the ADP employment change came in better than expectations. That was great. It really supports maybe a soft landing, but maybe more so just the Fed not keeping rates as high for as long. That would be definitely a super positive for AMC stock, for companies that have debt. GDP growth rate also was revised down to 2.1% from the previous reading of 2.4%. That was also very positive for, again, the side of the Fed, not necessarily for the economy, but it's showing the economy is not as strong as maybe what the Fed thinks it is. Now, tomorrow's data is going to be very important. You're going to have personal income month over month. For July, you're expecting 0.3%. Last month's reading was 0.3%. I'm not concerned about personal income. I don't expect a big increase. I really don't expect a big fall here. Personal spending is the wild card that could really move the markets, because you're expecting 0.7%. If this number comes in negative, well, the only thing that has kept us out of a recession is people spending money. So if people did not spend money as we think they did for July, that GDP report for Q3 not going to look as good. Not at all. And the odds of a hard landing definitely become a lot larger at that point. So do keep that in mind. I think the personal spending is the wild card. Now, I don't expect inflation, PCE inflation, to really move up all that much at all. I actually expect maybe it might come in lower than expectations. Core PCE price index month over month expected to come in at 0.2%. Last month's reading was 0.2% as well. So you're not expecting a change here. If we do fall to 0.1%, that's going to be great. If we come in at 0.2%, that's okay. That's 2.4% annualized. But if we come in at 0.3% or higher, then you start to have a problem. Now, PCE price index year over year expected at 3.3%. Last month's reading was 3%. You're coming off of those base effects that have been helping us, go lower over the last couple of months. Well, now those base effects are not helping as much, so it's kind of gonna, look like we are going higher now, when in all reality, your month-over-month readings are actually continuing to fall. And then PC price index month-over-month, you're expecting 0.2%. Again, same for core month-over-month. And if, again, that comes in at 0.1%, great. If it comes in at 0.3%, not as great. 0.2% is okay. Now, initial jobless claims are going to be very important coming out tomorrow as well. August 26th. For the week of August 26th, you're expecting 235,000 initial jobless claims. Now, the higher, the better as far as the Fed and not getting any more rate hikes or getting rate cuts sooner, but it will be a bad sign for the hard or soft landing if this number does come in too high, because ultimately, you don't want to see people losing their jobs. You want to compress the labor market by seeing job openings falling, not by people making, unemployment insurance claims or outright losing their jobs. That's not what you want to see. And we will ultimately get that data on Friday with the non-farm payroll report as well as the unemployment rate, guys. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.